Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for Tuesday, the 1st of February. Thank God we're out of January 2022. And it's about 7:05 p.m. Central Time. Well, I'm getting my muscles ready. We're due to get 10 inches of snow in downtown Chicago, starting tonight, all day tomorrow, and into Thursday. So it's going to be one heck of a storm. If it's light, I'm in good shape. If it's that really heavy snow, I have a problem. And right now it's raining, so we know we're going to get that moisture coming in, so it's hard to tell what it is, but it's probably that heavy snow that I hate. What an interesting time. You know, I went through on the Spider ETF video a moment ago showing people that what the market has done is it's made trade bottoms. That does not mean it set up an uptrend. It ended a swing to the downside, and now the market is trying to decide what to do next. If you look at other markets, like in soybeans, I don't know if you're aware of it, they're hitting contract highs. And that's because the weather in South America is atrocious. It's cutting into the crops. It's getting so late in their season. Remember, it's the other hemisphere that you can't make up those differences in some of the crops. The corn market can still get some rescue, but where beans are grown, that's getting worse, and wheat is the tag along on that. In our markets that we watch right now here, getting down to the 430 level just 48 hours ago in copper or so, too cheap. But I warned you, this market gets thinner because the Chinese trade is gone. It is the year of the tiger today, so I like that. But it's the beginning also of Golden Week, and most people take this week off that work in normal businesses. It's their national holiday. Don't expect a lot out of China at this time of the year. Vladimir Putin has done nothing in the Ukrainian situation other than blame NATO, blame everybody because he claims that they changed the rules of the game. He doesn't want to mention Crimea. You know, he didn't do that in 2014. He rescued those people. And he now thinks people in the Ukraine, and there are parts of the Ukraine that are very much want to be part of Russia. I get that. You know, I'm not talking politics, but you got 120,000 troops on the border and you're not going to attack. Something doesn't sound right, right? So we keep saying, pull your troops back and it's a sign of good faith. He keeps adding more troops. And he keeps saying the West is antagonizing him and it's a NATO event. He doesn't want the Ukraine to join NATO or some of the other breakaway satellites. He doesn't want troops deployed there. He doesn't want them on his doorstep. I get that. I do get he doesn't want them on his doorstep. And, you know, maybe something there is really what has to be done. But so far, nobody's shooting. And as I told you, with the Olympics starting, I don't think they're going to right now. He needs China's help. Can you imagine the news instead of the Olympics, we're watching an invasion? I'm praying that I'm right on that. Don't know if I'm wrong or right. In the gold, can it be more hard, a more difficult time to try to trade it when it's just going against that 18-week moving average of closes? I think not. When I look at what the market has done, we have to admit that this right here, market goes up. If it gets back here, it sets up a failure in the gold. Now, you'll see what I mean by that as the market then starts cutting through the supports in the market, even this one. Boom. So the people that had bought the inflation story, it's rampant, it's running, they bought the gold, the traditional inflation game, well, they got themselves caught, and the market is now consolidating. That's the way to look at gold. The chart has no trend. In the short term, you have a higher high, a lower low. That is not a trend. The market is now, it fought its way and sliced through key moving averages. As it climbs up, and I'll show you this, you get into the resistance like today where the 200 is. If you go further up, then you got the 18. If we take a look, where did the support come in? Well, we see those three averages, but you slid through them. But at the same time, the Bollinger Band was there waiting for the market. Do you see that? So that combination is what held the market together. But trying to trade a vertical drop like this, I welcome you to do it. I don't know how to do it. And I've never seen anyone that does. It's more luck when they get involved. In terms of Bollinger Bands and slow stochastics and patterns, you're oversold. You had a vertical price drop. It's not trending. It could start another trend if we take out the lows of Tuesday, day I'm talking, and close lower than that. Then you'd have at least lower highs, lower lows. I could say, you're in a downtrend. Do I think you'll attract a lot of sellers? No, because you're oversold and not embedded. In the gold-silver ratio, well, you came back up into this resistance. The market is defining something, and learn to recognize it. It's saying that in this general 80 area to 82, there's an awful lot of resistance. You come there, you've got 3 peaks so far possibly, where each one's lower than the prior peak. It's one way to look at that. In the silver, the trend, unlike gold, is clearly to the downside. Lower highs, lower lows. You have a classic bearish setup for the moment. You have the 18-day average under the 100 in green. The green is under the 200. Trend, if it continues to break, 2174.75. On rallies, the resistance, pretty easy to see at 23.21 to 23.25. So getting up there when you get a day like today where you get these big rallies, 60, 70 cent rallies from yesterday, I get it, but traders had asked me, what do you think? I get these calls and I go, there's plenty of resistance waiting for the market up there. Others saw what I did. The copper, no. I am telling you, this copper is basically a sideways market. You get to the upper Bollinger Bands, now you got to the lower. Now, we haven't gotten to a lower in a long time, since December, as you can see. But each time it's gotten there, it's done a great job of holding it. I know this is the lunar holiday and Golden Week, so I put that in my thinking. Do I think the pros are selling it aggressive here? I'd rather be short than long right now. With the stop over that high, that is at least with the trend of the market. In the platinum, you have a pattern of a higher high, a lower low. That is not a trend. You're working off an overbought condition, and you had a bullish crossover here. Bullish crossovers often result in the market trying to get up before it takes that low out and getting up through that high. We'll see if it's able to do it. If not, that would be a problem for the market, a big one. That would be a failure on a crossover if you got under that, and it could set you up to 937.5 before you know what's going on. In the palladium market, we still have an embedded reading. Until the red line closes under 79, I say the pros are buying these pullbacks into the 200-day average, still looking for that upper Bollinger Band to see what the market can offer them. Last but never least is the dollar index, which is in a corrective mode, but why not? It went from the lower Bollinger Band straight up to the upper one while trending. It can pull all the way back to the 95.90 level and find support against that. That's where I think the pros will be looking at the market hard. What I think is going to hold them back from being aggressive is that you're still overbought. Any reading over 70 on a slow stochastic, I think, is overbought. Now, for those of you that like futures, you're looking for things, so much of what we offer is involved in our trading kit. I mean, it's the different chapters we put together. 2 of my video series, free ones, are in here. The Arun indicators for you, how to use pivot points, that's in there for you. Our free charting software so you can see things. Now, you might want to take a look at our charting software. You'll notice, many of you, that my slow stochastics are different than yours, our values. They're going to stay that way. I modified mine. I tell my subscribers that are my paid subscribers what to do. You can change it just like that, and you'll go, oh, that makes sense. I did run my changes through the person that found it, by the way, George Linn, who created slow stochastics, and showed him what I do. Ran it by John Bollinger one time, too, and he does certain things with the Bollinger Band studies. I don't know if you realize it. You look at it one way, John has different variations of it. We all do different things to the studies that we create and use. How do you get all this? It's simple, and it's free. Just go to our website, top left. It's going to say, what? Free offers. Click it, sign up for what you want. I'm Ira. You have a good day.